Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, April 28th. Okay, it's 6:30 as I'm starting the video. Quick look at markets as far as the futures go. Really a flat morning. The only thing notable that I see is gold down 0.75% and silver down 1.75%. Of course, today we have Apple and Facebook after the bell, and we've got Jerome Powell at 2 p.m. this afternoon with a statement, and then his press conference at 2:30. So that has the potential for, of course, moving yields. So what I want to do is change it up a little bit this morning and take a look at the 10-year yield, because we did have some developments yesterday, in case you didn't notice. Look at TLT, look at the US dollar. Then we'll go through the indexes and FATMAAN names and take a look at potential trades with Microsoft and Google that went in opposite directions yesterday after their earnings announcement. So let's kick it off here with the 10-year Treasury Yields. Just to remind you, last August we started a steady climb in yields, coming off the floor at 50 basis points, then climbing up to around 1.2%. And then there was an acceleration in February that took us all the way up to 1.75%. And over the last 3 weeks, we've been backing off on yields. You can see here 1.75%. And we backed all the way off. I think we got down to 1.52%. But notice that 1.5% right here was key support going back way back in here into 2019. And so we came back and held that and have gotten a bounce. And then yesterday, yields popped 5 basis points. They went from 157 to 1.62%. Now, that's a pretty healthy jump in one day. And so now we've got overhead resistance at 1.65. And with Powell going this afternoon, he definitely can move markets with whatever comments he might have. Now, why is this important? Well, remember that this surge here, this move, was what rattled the tech trade, specifically and most importantly, or most significantly, in the bubble stocks, the high valuation names that aren't supported by any earnings whatsoever. And so that was bearish tech, but bullish for banks, bullish for cyclicals, bullish for IWM in general, because there's a lot of value names buried in that index along with the regional banks. KRE, we talked about the regional bank ETF. If we get a resumption of this march higher in yields, which is indicative of, robust economic activity, inflation fears, that whole narrative, the reopening trade, all that stuff comes back into focus. Whereas over the last 3 weeks, we've seen bounces in those broken names in tech land. They've gotten a reprieve over the last 3 weeks as these yields have backed off. So what I'm saying is, you see a break above 1.65, you may see that rotation come back pretty quickly out of those high valuation names and back into cyclicals. So I think that has to be in focus. And what I want to also point your attention to is look at RSI. Remember, we always say that anything above the 50 line RSI is operating in its bullish regime. And you can see here that ever since last August, even on the dips, RSI is held right in there at the 50 line, maintaining that bullish posture. What do we see in PPO momentum? We see a peak here, a gentle decline, and now PPO curling at the 0 line, and that's usually a bullish setup. Notice that ever since back here in August, PPO has stayed above 0, keeping it also in the bullish regime for momentum. And if we get that PPO bull cross at the 0 line, that's a bullish move. That would also likely be accompanied by a move in the yield itself above 1.65. I think that's the point where you know, if you haven't been sitting up taller in your chair already, that would be the point of saying, hey, okay, the charts are telling us that yields are going to drive higher and we need to take, you know, appropriate action. You know, specifically, you know, if you had jumped on that rotation into those higher valuation names for a bounce, maybe time to take some profits there. So looking further at TLT, you know, higher yields, lower prices in TLT. Here, to me, it looks like a bear flag. We had talked about on several occasions this 50 EMA acting as resistance. And although I cleaned up the chart a little bit, I did have the fib retracements. This 50 EMA corresponds to a 38% fib retracement level, very common level to see a bounce and a bear flag. And now yesterday, we dropped below trend and actually closed below the 20 EMA. And so now we've got this one large volume over price support bar right here at 138. You see a follow-up move, you know, this afternoon, tomorrow, the end of this week, into next week, that drives TLT below 138. Then I think you start seeing a follow-up move down towards 135 to retest these lows down at 133. And then, of course, everybody will be talking about, oh my God, yields and bond market vigilantes and all that kind of stuff. But this break of the bear flag yesterday, I think, is pretty important. Now, if it can hold the line at 138, false alarm. Certainly, if yields go back down and TLT takes out the 50 EMA here at 140.5, then yields are going lower, and it was a false move, a head fake. So, but I think this is going to break down here. As you know, I am short TLT, so we'll see if we get the follow-up move. Also affected in all this is the U.S. dollar. We had this rise. You know, if I were to zoom out on the dollar, remember we started way back up here at 102.50. That was March of last year, right before the pandemic. The dollar was at the highs, and it's been on a steady decline ever since. And here again, we've had this rise in 2021. I think that was a technical move. I think it was somewhat of a short squeeze because everybody and their brother were short the dollar down here. I think they've gradually been squeezed out. And now we can see in April a move back lower. And now we're back at trend. And I think if the dollar breaks here then it'll resume a downward move. And that would be bullish commodities. That would be bullish precious metals. So a lot riding on the dollar. And of course, there's all this interplay between rates and the dollar and all that stuff. And I'm not any kind of macro expert, but falling dollar is bullish the commodity complex. So we need to be on watch for a resumption of this downtrend in the dollar, giving yet another boost to the commodity complex, and yields tied in with that for banks and other cyclicals. So let's go on to the indexes. I mean, just absolutely nothing happening yesterday on SPY. We're hovering right here at the highs. Notice that these bearish divergences have been persisting. We have just not had any kind of horsepower to break out of 418. And I wouldn't be surprised if we made another trip down to trend, or even back down to the bottom of the box to test these recent lows down here at 410.50. But we'll just have to wait and see. You know, if we get a move above 418, I think you got to get long and then put your stop just below. As a, you know, this could easily be a bull flag from this move, just waiting for the FOMC to clear this afternoon and then give the green light to for higher prices. Moving on to the 30-minute chart, we see exactly the same thing here. Just a lot of chop between 416.50 and 418. I mean, if you're Joe, intraday trader, you can certainly try your hand at, you know, trading inside the box. If that's not your cup of tea, I think you got to either wait for a breakout or a breakdown to take, you know, a longer term view, at least as far as this 30-minute chart goes. I think on a breakdown, you come down here to 416. If that can't hold, you're down to 414, and then potentially down to test these prior lows. Qs are the one that I did see something I think that might be notable. You see on the 2-hour view, we made a high here at 342. We backed off, came down, touched the top of the gap, and then bounced up to 342 again, where it failed the other day, and backed off hard. Again, we've got the bearish divergences in RSI and PPO. What do I mean by that? Well, momentum peaked way back here when price was at 334, and ever since we've been grinding higher, but with lower and lower and lower momentum. And so now we've put in what could be construed as an early double top look. So what I've done is simply projected out and playing a what if. This isn't a prediction, it's a what if. If price came down here to 334 and broke below, that would trigger the double top formation. And the way you project a measured move on a double top is the height of the top, which I've got marked here as 2.5%, and then you project that 2.5% from where it breaks, and that would be on a break below 334. And for all intents and purposes, it brings it back down to 324, which is key support. I mean, it's elegant from a technical analysis perspective. That doesn't mean it's going to happen, but what would invalidate it is, of course, a breakout above 342. And, I'm of the mindset, if you get the breakout above 342, you take it. What could cause that? Microsoft turnaround, Facebook blow it out of the water, Apple blow it out of the water, Google go higher, Amazon blow it out of the water. You get all those guys, gapping up big on earnings, Microsoft turning around, this will break out above 342. But by the same token, if Apple fails, if Amazon fails, if Facebook fails, and I'm not talking about earnings, I'm talking about the reaction to earnings, because that's all that matters. We saw yesterday, Microsoft had a great quarter. They sold it off. That could happen on these other names as well. So a lot riding on, these big market cap names, and we could either break out here or move lower. I know that sounds like a simplistic statement, but that's the fact of the matter. Those big names can take us either one way or another. I really think the key remains 342. You break out above, you take it long. You break below 340, I think you're coming in here to 337 and potentially 334. Here's the expanded view on the 30-minute. Here was that stiff rejection at 342, and then just biding time here down at 340. You break 340 here, you've got a little support level at 339, but after that, it's 337. Moving on to IWM. Not much of a day. We did have a little push up here to 229.50, where it backed off to 227.75. I don't have those marked, but you may want to do that on your chart. 229.50 is resistance. 227.75 is support. Here it is blown up. We had a little fake breakout back into the range, and then, closing here at 228.50. I think today, moves above 228.50, you can buy and look for a move back up to 229.50, possibly 230. But a break below 227.75, probably going to come back in here and test this gap, and maybe even come down into this 225.50 area where we saw rejection after rejection until we finally broke out. So now this is support here at 225.50. If you're new to the channel, thanks for stopping by. I hope you see value in the commentary to get these levels and some of the nuances identified for your active trading. If that's the case, please hit the subscribe button and the alarm bell. That way you'll be notified of all my content. Jump over in the show notes where you'll find a place to register for all my content. I send out stuff during the day on what I'm seeing in the markets, trade ideas, things of that nature, so you won't have to go hunting for things that I may post along the way. And you'll also find places on the blog site, interesting and helpful articles for traders of all levels. And of course, subscribers, I really encourage you to hit the like button. I hope you're seeing value in this content, and I hope it's helping you focus on your execution around the levels. I think if you trust my levels, and I think over time, it's pretty clear that I'm pretty close on the levels most of the time. So if you can take that off the table and just focus on your execution, I think good things will happen. So pass a link along to a friend, colleague that may benefit. Hit the like button, and certainly all positive comments are appreciated. So Facebook, Although it shows here closing near 305, which was the original breakout level, Facebook got a pop after earnings, I guess in sympathy with Google. And I looked pre-market, trading up around 308, 309. So if you had held a long from yesterday, what you may want to do watching the opening trades is take your profits on that move. If you want to stay long, you can reset at 310, and maybe you get that pre-earnings push into the bell where it breaks above 310 and makes a move towards 314. You'll have to use your best judgment. If it looks like it's taken off in early trade, what you can do is just raise your stop and keep your whatever your position was, whether it was 305 calls or whatever you were in. You can just hold those, but put a trailing stop on it in case they, of course, reverse it. You don't want to hang on to that unless, of course, you're hanging on to hold through earnings. So Facebook is here around 309 in the pre-market. Apple stuck in this range. I still think 135 is your pivot. Earnings after the bell. If you get a move above 135, the next overhead target is 137, which is a really big level. If for some reason it falls apart and loses 134, then your first support is 133. I do have to tell you that I saw some, decent sized put trades in the option chain yesterday. Guys thinking they know something ahead of earnings or potentially just hedging out their stock positions. You never know exactly what the intention is, but expectations are pretty high, and you never know how what's going to happen on earnings. So either a bearish view or hedging out. But let price be your guide. See what happens after earnings. Notice the bearish divergences. Price along the highs, but momentum and RSI coming out. And like we always say, that can be changed on a dime with earnings if they blow it out and the market likes what they see. Take it up above 137, then we should be off to the races. Tesla, they didn't like the earnings. It gapped down. We said that this was a support level here. 705, 707, 708, 710. And so now price is clinging right here to 705. You break below, then that brings in this 670 pivot where we spent a lot of time over the last couple months in this trading range here. So for today, I think you key off of yesterday's low. You break down below 700. That opens the door for lower. If it can hold the line, then your first target overhead is 725 and then 750. But it's got to hold here. It's got to hold 705. Below that is going to be pretty bearish. Okay, Microsoft had a negative response to earnings. We closed around 262. They gapped it down. I had a low, an aftermarket low of, what was it? 251, which was down here in this gap. And then I had it pre-market trading around 256. You can trade it one of two ways. Wait for a second day play. That would be waiting till the market action today finishes, and then tonight marking the bracket, the high of the day and the low of the day, just like we did on Netflix, and then you're playing the bracket. if you're sharp and want to play intraday today, I think this 150 or 256 is a decent line. If price opens above 256, it can hold it, then there's a potential to move higher into this open gap. And if it drops down below, I think you may even come down to retest that opening low of last night around 251. I mean, it's been in my experience, and it doesn't happen every time, when there's a plunge like that, they like to come down and revalidate it. Whether they do that today, I have no idea. But I think a lot of times they just don't let that sit down there. They come down quick, and then if they're going to do it, they reverse it. So mark that aftermarket low last night on your charts, and then decide how you want to play it intraday if that's your thing. I'm probably not going to do anything with that today. I'm going to set up a bracket. I don't want to get all involved in something before Jerome Powell at 2 o'clock that could, screw up and muddy the waters. So I'm just going to let it be. But you trade it as you please. Amazon, they report tomorrow after the bell. I think today the same pivot levels are intact. I think above 3,400 you can stay long. If we break above 3,440, that would be a place to get long if there's going to be a pre-earnings run. I did not look at it pre-market, so you'll have to take it from there. But I think 3,440 and 3,400 are the key levels. Moving on to Google, which was up about $100 after the bell. I did not look to get a specific number, but I've just penciled it in here. There's going to be a big opening gap, right? Whether it's 2,400 or 2,412 or 2,398, wherever it opens, there'll be that gap below. And then same way with Microsoft, you can either wait to create a bracket trade for a second day play tomorrow, marking the high and low of today, or if you see that it's going to be a gap and go, you can get long, at the open or whatever, depending on, what you see coming out of the gates, and, play it intraday. I'm not going to touch it today for the same reason I'm not going to touch Microsoft. I don't want to get all engrossed in this thing before Jerome Powell. Netflix. And here's an example of that bracket trade I was talking about. Notice that on the gap down, there was an initial bounce, and then they even took it lower. They took it lower than the initial spike down. You may see that on Microsoft as well. Go down and revalidate that low. Here we had another support level at 500. So if you play the bracket, there hasn't been a trade yet. You're waiting for either a breakout or a breakdown. Now this is a pretty wide bracket, so if you wanted to, you can get long against the low side of the bracket or short against the high side and just play this $15 range, which is more than wide enough to make money. But if you're playing for more of a gap fill, you wait till price takes out this 515 and tries to fill this $35 gap back up to 550. Or if things fall apart, you get short on a break below 500. Okay, guys, let's wrap it up here. I hope that's given you some ideas. Be cautious today. The market may just oscillate in front of Jerome Powell and in front of Facebook and Apple. Maybe a lot of people are like me, more of a wait and see. what's he going to say? Even though he's expected to say nothing, a lot of times nothing moves the market for whatever reason. So be a little cautious. Certainly, if you're actively day trading, just keep that 2 o'clock in focus. You never know what the algos are going to do when they read that statement. And then at 2:30, what can happen after that. And remember the old rule of thumb, the first move is fake on the FOMC. Head fake higher, head fake lower. Usually the first move is fake. So don't, if you see a move either way, just take a breath, take a step back, let the volatility play itself out, and then let the market choose a real direction. Let's not, fire off the hip at that first 5-minute candle that, either goes for us or goes against us. Let's let that volatility play out, and then we'll know what to do. So have a good day of trading, and talk to you next time. This has been Chris Buss with Trader's Profit Compass.